Hey Reluctant Preppers, this is showing you just how easy it is to purchase silver without paying any premium over spot price. You just go to sdbullion.com/rp, scroll down and enter the special code to get silver without any premium, and they'll mail it to your mailbox, discreetly packaged. Inside you'll find a beautiful 10-ounce bar of fine silver, and you are able to purchase that and have it and add it to your stack and your collection without paying any premium. And you're supporting Reluctant Preppers along the way. Thanks.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and co-hosting with us today is
Dunagun Kaiser from Reluctant Preppers. Welcome all you Reluctant Preppers. We were delighted to find out that after 3 years of mutually supporting each other in our independent media efforts, our travel schedules overlapped this January in Israel, and where we have a common guest, Lior Gantz. He's an investor and the founder of the Wealth Research Group. Lior, thank you for joining us again here on both Reluctant Preppers and in this case,
Finance and Liberty.
Sure, I am glad we got connected.
We were just delighted that we could make this happen, and just wondering if we could kick around some topics of current interest and concern for our mutual audiences. Between Elijah's audience from Finance and Liberty and mine on Reluctant Preppers, there's quite a range of concerns that people have.
Sure.
My audience may tend to be more concerned about the risks of potential for a catastrophic collapse of our finance and banking system, and wondering how they can protect themselves against that.
Mm-hmm.
They're certainly very familiar with the concepts of like stacking precious metals and having storable food and that sort of thing.
Sure.
But you've often spoken about the interesting times we're living in, of which way is the world going, or is it going multiple directions at once with huge opportunities and risks at the same time. And
okay.
Elijah, maybe you can add what interest and concern some of your audience might have that Lior could address in that same vein.
Right. I mean, as it pertains to like the risks of the financial system, as you said, how to prepare, and also just some of the opportunities there are. One of the big stories right now, obviously, is Bitcoin and cryptocurrencies. It seems like maybe we missed the boat on that, but as we see changing financial times and stuff, what are the opportunities that arise for people to really grow their wealth?
Sure. And let me address cryptocurrencies first. What I think happened, and this is important, is when you launch a company, when you launch a business, you give it a certain value, a certain market cap. Okay, let's say you launch a furniture store. Let's say you want to take it public. So you got inventory, you got room, you got real estate, you got everything, and then you give it a certain value. Let's say $100,000. So when the stock starts trading, people trade it as if it's $100,000. Now Bitcoin started trading at 1 cent. In other words, its initial value was rogue. It was nothing, and therefore this ascent that it has taken is sort of artificial in some ways, because it had initial value for the people who used it, but they launched it in a way that it had no value, like a game, like fun. And so now that it's 13,000 or 19,000 at the peak, it seems like a $5.6 million percent move. But honestly, if we really think about it, it had initial value due to privacy issues, the availability 24/7, send money around the world. It solves many problems in today's world, and so it does have value. It's not tangible, so it's intangible. It means it's not an atom. It's just not physical anywhere. It's not like a couch or a kitchen or whatever that you can assign a certain atomic value to it, but it has an intangible value, the same way as your website name has an intangible value. If you want to sell your website's name, it's intangible. You can't eat it or do whatever with it, but it has value, right? Amazon.com, it's priceless, right? And so as long as the internet's around, a domain name is something that has a lot of value.
Or other intellectual property. As the world has changed, that's become increasingly
Sure.
something that's considered to be of great value.
Exactly. Many tangible items are are valueless, right? When you take a piece of shoes, you can wear them. They make you warm in the winter, right? But when they get old, what do you do with a tangible item that has value, right? It's a shoe. You throw it away. And so tangible items always get thrown away and become useless, and intangible items rise in value and then fall in value, etc. The value of Bitcoin or any of the other altcoins depends on a few things. First of all, do they solve a problem, right? And secondly, what is the network effect, the acceptability of it? So we've had in history incredible amounts of ideas that are amazing, but got no market acceptance. And so if they got no market acceptance, they have no value. We assign value to things as humans, right? Okay, so these are the two things to remember. Now, how do you want to view cryptocurrencies? All cryptocurrencies, all crypto projects, Bitcoin, but all the other ones, like Wealth Research Group, on the 12th of December, like 3 weeks ago, we covered Ripple, for example, at 27 cents. The day we sent out the alert was the day of the bottom. It started descending and now it's up 1,000%. You can view our research at wealthresearchgroup.com/2018 and see exactly what we said about Ripple. It's up 1,000% in 3 weeks. Some subscribers have made a lot of money with it in 3 weeks. Why is this happening, right? Because of this mispriced valuation at the beginning. So when people finally adapt to it, they say, oh my God, this is worth much, much more. And so it moves erratically. And then the idea is this. You need to view cryptocurrencies as startups. Technological startups. Tech startups. 95% of them will be worthless and useless when this surge is over. Just like the tech bubble. The tech bubble, or the tech rally, whatever you want to call it, in the 90s, it formed the internet. The internet is still around. Some of these companies are the behemoths of the world. Qualcomm, Intel was formed way before, but the surge, Cisco, which surged immensely, Microsoft, right, Oracle, each of these are hundreds of billions of dollars worth, and they're around. The internet is around. We've established many things during this tech bubble, but you look at the companies that were malinvested in. In other words, people dabbled with them, speculated in them, put billions and billions of dollars into them, and it's in money heaven, right? And so the industry remains, but the players who were malinvested in, or the management teams, I should say, that were trusted with shareholder money, but they had a good idea, but not the right talent to execute, etc. The market changed on them. They got vanished. And that's what will happen with 1,360 cryptocurrencies right now. We don't need all of them.
Right.
Not all of them will fill a need, or many of them will get out-competed by other cryptocurrencies, by other projects, etc. So it's just important to understand these are not safe havens. People try to compare it to digital gold or something like that. It's completely different. What you're looking at is perhaps one of these cryptocurrencies will facilitate in the future a sort of a store of value for a digital realm. But we don't know if this will happen or not. Bitcoin's 50% descent just a few days ago, right? And then comeback shows you this is not a store of value. It's a vulnerable technology which has incredible potential to go up a lot and to go down a lot. And so it's speculative. That's what it is, and that's where you can really make money. Right? Ripple's up 1,000% in 3 weeks. Wealth Research Group went and covered Dash at $30. It's over $1,000. People have made a lot of money. Speculative gains. Okay? Litecoin at $20. It's over $340. We also covered. We covered Monero. We covered Steam. And we covered Ethereum at $12. It's over $700. So the idea is this. If you want to make speculative money with reasonable sums, so obviously people have mortgaged their houses. I don't know if that's the smart idea to do, right? That's the place to be. That's the place to be even this year. As regulations come in, this will give business owners and institutions much more certainty that this is going to stay, and then they will plow more money. The problem is all the exchanges are backlogged. So in other words, some people are saying, hey, I can't even buy some of these cryptocurrencies, or I can buy $500 worth, etc.
That's right.
And so what we've done is we've expanded the realm of Wealth Research Group, for example, and now you can invest in common stock of companies, publicly traded companies, that deal and facilitate with the blockchain. For example, we were the first newsletter in the world on September 18th to cover HIVE blockchain technologies. And the company was launched at 74 cents Canadian. 2 months later, it's 675 Canadian. So you got a 900% move. And it's building mining facilities in Iceland and Sweden and expanding, right? And so there is no liquidity problem there. The stock trades millions and millions of dollars a day. And so that's an opportunity where people emailed us and say, hey, I put $10,000 in there. I just banked 80 grand. So that's like 2 years of salary for an American. So you've got amazing opportunities, and we're expanding now into that realm as well. I did prepare something special for both your audiences, and we created a report, a special report about the top 5 cryptocurrencies for 2018. You can go to wealthresearchgroup.com/top and the number 5. So top 5, and there you'll have our top 5 for 2018, which we've never uncovered anywhere. It's the first time we're ever showing our top ones for 2018. So I hope that answers the question. The thing to keep in mind is this is a tech startup boom, a new tech startup boom. It always ends a bull market in stocks. So think of it as the NASDAQ rally, in other words. But people are not looking at these companies on the NASDAQ. They're looking at companies that are on this new format, which is called cryptocurrencies. And what is nice about it, I think, is important for people our age, Elijah, is that a lot of young people are becoming investors sooner. You got teenage investors. So they're going to learn tough lessons, but they're also going to learn important lessons going forward on how to value companies and how a business model, that white paper is not enough. You got to know management. You got to know what you're doing. You got to be an active investor, or you're prone to make more mistakes.
Right. I mean, it seems like what you're saying is overall cryptocurrencies do have great potential, but it's also extremely risky because, like you said, 95% of them probably won't really make it.
Yeah, and you know, to people who think that this is that any cryptocurrency is basically a sort of a bubble or something like that, a fiat currency, for example, when it's circulated among people, we all have ascribed a value to it. Mm-hmm. Mm-hmm. And so it's the same way. If us three were to create a currency right now and start using it, to us it would have a value because we would be buying and selling
transacting it. Yeah.
Exactly. We ascribe a value to a certain currency. Now, its intrinsic value is not the piece of paper that it's written on, because it might not have any paper involved with it. So the intrinsic value of it is sometimes the mathematical difficulty that it takes to create it, or the amount of people that have to get involved in this process, like the miners, the developers, etc., the community. It all depends. It's a very philosophical question. Mm-hmm. But the bottom line is, what is the utility that it provides? Right. And a lot of these, if they're unhackable, and Bitcoin hasn't been hacked, right? The blockchain itself. So its blockchain hasn't been hacked. And now it takes about $30 billion to fake a Bitcoin. So nobody would do it, right? And so it facilitates a lot of solutions for international trade. It has problems. That's why a lot of the altcoins are performing very well, because it has scaling problems, a lot of problems that the community will have to solve. Mm-hmm. Therefore, it's fluctuating in price right now. But the fundamental thing to understand is, of course, they have value. They have value like many other intangible things have value. It's the problem is what is their value, right? And that's where it's always coming down to you got to find an undervalued coin or an undervalued asset. So
many people have discussed the possibility of a synergistic relationship, some kind of to increase the utility and to provide that back end store of value to augment the transaction utility of cryptos, of some kind of a precious metal backing for cryptos. Do you foresee that and the people that you've talked with as a credible next step or even a necessary step in order to provide both?
Well, first of all, Venezuela, the government of Venezuela has launched a cryptocurrency or are launching a cryptocurrency that's going to be backed by the country's oil, gold, and diamonds. So that's a huge story right now. And we'll see that they're going to be the guinea pig, right? They're going to be the experience of can we do this? To think about it in a realistic way, it shouldn't be a problem, and the supply chain for gold, for example, or silver would be much better. If you want to do the kinds of price manipulation or suppressing of price or flash crashes where JP Morgan comes in or Barclays or HSBC comes in and they want to make money on trades and they do what they do on the futures exchange for gold and silver, you can't do that with Bitcoin, for example. They can't. If they do that and people ask for physical delivery of their coins, it's do you have it or not? Send me my Bitcoins. So like on the futures exchange. So if the banks can't do that, they're on the hook right there. That's going to short squeeze them forever. Now, if you do that on gold and silver, they call people, hey, you want a cash settlement? Sure, cash settlement. Why not? I don't want to actually store my gold and silver. I would just trying to shake you up, right? And so with gold and silver, they have more leeway because they're actually physically, you have to move them, etc. So they've been doing it for years. But if you put everything on a blockchain, simply on a database, and you account for all the gold in the world and silver in the world, it's a project that, in my opinion, is completely unrealistic. But you can do that to a certain degree. For example, in a community or a city or some, and everyone has to volunteer to to disclose and everything. But if we know where all the gold and silver is, there will be no price manipulation because everything will be accounted for on an uncorruptible database. And so if the country of Venezuela is going to start and try and do that, it's going to add more disclosure and more transparency to the entire process. Now, how you do that technologically, they're going to have to solve that problem because you need to store those elements somewhere. And what moves is the certificate of ownership, basically, between people, which is what the gold standard is all about. So it's basically modernizing the gold standard, which is what people want, right? So we'll see what will happen with this. Obviously, this will increase its fundamental value, and it will increase it will decrease the level of volatility that has to do with it, because you always know, hey, the gold hasn't moved much today, so my tokens are worth such and such. It gives a lot of ability to do business. If all the people in the world were to do business right now on Bitcoin, it'll be very hard. You get a copy one day for $5, the next day for $6, the next day for $3, etc. You can't run an economy like that right now. And so, for governments and institutional investors, give an example. Ray Dalio, right? Ray Dalio, since 1982. He's come back every year with about 21% return for his investors. Now, 21% return, that's higher than Warren Buffett's. Mm-hmm. So he's the largest hedge fund manager in the world. And in quarter 1, 2, and 3 of 2017, Bridgewater Associates, the hedge fund, and you can't get in there. The client list is closed for like 10 years. We're talking, endowment funds, the sovereign wealth. They're the people that are invested with Ray Dalio. He is now the 6th largest holder of GLD. So he's piled into gold. And the guy want to make 21% a year. So take 1,300, which the price is today, and he's thinking the price will be about 1,560. Okay, next year. That's what he's saying. Basically, by becoming, he's looking for a 21% gain, right? And so at 1560, lots and lots of companies who were sitting on uneconomical projects right now, all of a sudden become economical. Now that shift between uneconomical and economical changes the entire speculative sector for gold and silver. So gold stocks and silver stocks are not on this 2-year bull market like the spot price. So the spot price bottomed at 1150, right? On December 15th of 2015, right when the Fed hiked, right? And we can talk about why that happened. But right now it's 1307 as we're doing this interview today. After another rate cut. And the gold and silver stocks have made a fake breakout in 2016. The S&P 500 tanked 11%. People hedged with other sort of stocks, gold and silver stocks, and they rallied for like 8 months, but then they come back to reality. Why? Because about half the projects in the world are uneconomical at these prices. So when the price moves up higher, all of a sudden many of them become economical. Now, if you think about them as economical projects, they're very cheap. If you think about it as uneconomical projects, I'll just buy more GLD, right? But if you think about the economical potential of them, some of them have these margins which are insane at 1560, even at 1400. For example, a company out of Nevada, which is like the gold capital of the world, can take over 6 or 7 other mismanaged companies right now for really cheap, and then go ahead and create a $150,000 ounces a year mining production in Nevada, and they can do that for 80 or 90% discount to other projects. Okay, and so this is huge. And if you want to read the research about this particular company, you just go to wealthresearchgroup.com/gold 2018. And you'll see the entire idea. It's the same group behind HIVE Blockchain Technologies, which was the first and only pure blockchain company. So
I was just going to ask you about the relationship there, because when you were talking about crypto, you were talking about how some of the crypto mining companies and other businesses that are working in the crypto space are potential investment vehicles for people if they want to speculate or if they want to invest, as opposed to having to buy the underlying crypto tokens themselves.
Sure.
And here in the gold and in the precious metals sector,
sure,
you've talked with us in the past about how if people want to participate in the potential for growth with the miners, there can be a leveraged, disproportionately leveraged gain,
sure,
in the right market,
sure,
in the right conditions. And it sounds like what you're saying is, it looks like maybe the signs are lining up for 2018 to be potentially a good year for.
I'll tell you what. Here's the thing: gold bull markets for stocks, for the miners, for the junior sector, they usually start to go parabolic or start to go into sixth gear about 80 weeks into the spot bull market. And so right now we're at this 80-week period. So we're about weeks away if this continues, and gold looks to be very strong because there's inflationary pressures in the U.S. economy right now. The Chinese economy, the Chinese government has just said yes, a big fat yes to, hey, we're going to expand credit. We're going to move into infrastructure. And they're building mega cities. If you haven't been to China, it's something like you've never seen before. I'm talking mega cities are for 50 million people. You got to connect them with bridges, roads, trains. They want to connect China to Turkey, like the entire Eurasia area. And they when they approach a government, they tell them, hey, we'll fund the road. We'll bring you the employees and pay us back with very low interest rates for 30 years. So what are you going to say? No? They're supplying the workers and they funded the roads. And this brings trade and commerce. So China is taking over the entire new area of Eurasia, which has enormous potential. And they said yes to credit. So their middle class is going to have the availability of credit. They're going to buy real estate. They're going to buy their first electrical home, right? They're going to use copper in all the walls. They're going to use copper for all the
electric
blocks.
economy. We've heard about that. If you could touch
Electric
on that.
vehicles need twice the level of copper as conventional cars do, and then you got smart homes. Smart homes need much more copper than conventional homes, and look, these economies, they're undeveloped, right? Or they're developing, right? So if you're a developing nation, what are you going to do? You're going to build an entire economy on oil? No, you're gonna say, okay, this is my industrial revolution. I'm gonna do it in my way.
Jump right to the new system.
Yes, exactly. So they're gonna do everything, and copper is gonna be an important commodity, like a really important commodity going forward, because these people have no electricity right now. We're talking in the billions, right? China and India together, and so the copper market might be the best performing commodity for 2018. It's already at a 4-year high. It's traded up 14 straight days, the spot price. And I'll tell you what's really exciting. The number one company in mining, in my opinion, it's always priced right. So you can't buy it for a discount. I don't recommend it as an investment, but just to watch these people. It's called Wheaton Precious Metals. You probably heard of them as Silver Wheaton. 12 employees, and they bankroll. They make enormous spreads. What they do is they do streaming deals. So they come into a mine, and then they fix a certain amount of your silver streaming, and they fund your operation. To do that, they have a streaming deal put in place, and then they fix the price of silver that they're going to buy from you. So at $5, you're going to sell them your silver from your copper mine or your zinc mine. Just the silver they're going to take from you at $4. Then they sell it for $18. Incredible, right? And so they've done incredible deals. But they've been very selective. The last 18 months, they've done 3 deals. 3. This company has cash. They can do any deal they want. They probably get slapped with, deal after deal to view every day, like a white paper, right? But they only done 3. And right now, they came in, and they not only funded this tiny $30 million company in the copper and zinc space for their silver and gold out of their mine, or their what they want to build as a mine, but they also took equity position. So you got the smartest people in mining right now taking a position in a junior mining company. For the first, that's the best vote of confidence. That's like Warren Buffett. You call him Warren Buffett and say, hey, I want you to look at an insurance deal. And he comes back and say, hey, I want dibs. I want in. So this is what's going on right now. And this tiny copper company is called Kutcho Copper. Okay? Kotcho Copper. Okay? I'm sorry, Kutcho Copper. Kutcho Copper just started trading 2 weeks ago. It's a new company. Trading on the venture exchange and on the OTC. And you can get the full research, because I did like a thorough research on it for like 3 months. I've been checking this story out at wealthresearchgroup.com/inflation. And the reason that this is the perfect inflation play is because copper is the commodity that moves first in inflation, even before gold. It moves first. Copper moves first. It's the industrial value of it means that it moves first. Okay. Now you can ask any expert in the mining field, and he will say people love gold, but people make money with copper. And so this company right now, it's trading for about 65 cents Canadian. And in my opinion, if you look at their numbers, they potentially can end this year, 2018, at $1.72 Canadian or $2.40 Canadian. This could be a 300 or 400% move. And this is not a problem of liquidity. You can get in and position yourself.
Right.
Wheaton Precious Metals has put in about $40 million into this company. So this is the kind of confidence they have in it, and what they've committed to it. It's the only copper company in 2 years of Wealth Research Group analyzing companies and publishing information that you should consider for your portfolio, that we've uncovered a copper company worth getting into. Now they have also a zinc angle in their mine, and as you know, zinc hasn't been found in 2 decades on a substantial level. They have like 1 week worth of inventory left right now. It's in acute shortage, and they actually are sitting on historical resources, so it's already in there. Anyways, incredible opportunity, and like going back, so China said yes to credit. Consumer confidence in the U.S. the highest it's been since 2000. So you've got all of these converging circumstances that say, hey, the deflationary era of 2008 to 2017 is probably wrapping up. And why do I say deflationary? So most analysts, even ones that you've had on your shows, they've said this is an inflationary period between 2008 and 2017. They've lowered interest rate to 0. They're accommodating, so they're quantitative easing.
Correct.
Right? This is going to create a huge inflation. But it doesn't. And the reason it doesn't is when you lower interest rates to 0, you're basically telling people, hey, don't rush to take out a loan. Interest rates are 0. We're lowering it even lower. Don't worry. You can take a cheaper loan in the future. So people don't take out loans. It's reverse psychology. And when they
start to tighten,
when they start to tighten, people say, "Oh my God, inflation, interest rates are going up. If I want to take out my mortgage, I better do it now instead of a year from now when it's higher."
Yeah.
So usually inflation happens when they tighten, but they tighten too much. The synthetic interest rate, so the Fed funds rate, overtakes the 10-year Treasury, and then you've got an economy that's stalled, and then you got recession. So they're about a year away from getting there, and that's going to stall the economy, and that's going to create a recession. So we're 1 year away from the recession. That's why I'm saying 2018 is the last year to really juice profits out of the market before you're going to have to go into a much more a different type of portfolio, because you're going to hit a recession. Unemployment is so low right now in the U.S. It's below the official, right? But it's below the natural unemployment rate. And so you got a lot of people that are going to have a wage increase. It's going to be not substantial. We're not talking an incredible life change, but people are going to spend. And so you're going to have inflation in the U.S. probably double what it is right now. So it's 1.5% official. It's probably going to end the year at about 3.5, 4.
Wow.
Okay, which is perfect for precious metals and precious metal stocks. People think that hyperinflation is the best scenario. It's really not. It's probably best for the physical commodity, but it's not going to be good for your lifestyle.
Right.
Okay. The best thing is moderate inflation that is going higher for these commodities, for energy prices, etc. When oil prices go up, that's the most the most important component of these mining companies, their highest expenditure. So when oil prices go up, they got to increase the commodity price. And so if you track oil, you're going to see gold and silver do the same. So this is going to be a very, very, very good year to get involved in precious metals and in precious metals stocks. And the reason is, once the U.S. equities market top off, you're going to need to hedge your portfolio. People are now long U.S. equities like they've never been long U.S. equities. And so you saw an 11% correction in 2016 and what it did to commodity prices. So just think what will happen in a full-blown top. People are going to need to hedge, and that's the perfect environment for precious metal stocks. You saw that in 2000, right? When did the gold market start, right? The U.S. equities topped off, boom, right? So very, very, potentially the best year for precious metals investors in about 7 years. This could be.
And that's actually one of the topics we wanted to discuss is the U.S. economy in 2018.
Sure.
A lot of people, I mean, we're seeing the stock market boom and everything like that. A lot of people say, and you said consumer confidence is the highest it's been in a while. a lot of people see this as, the economy's going better, but it seems like you're saying it's going to, after 2018, we're going to hit another recession. I guess specifically, though, on this economic boom we're seeing, is it real? You mentioned the unemployment rate. You mentioned low inflation. I mean, is this all real? A lot of the people I talk to are saying, the labor force participation rate is extremely low right now.
Sure.
I mean,
100 million people are not in the
right.
workforce. Yeah.
So, I mean, is this economic boom that we're seeing, is it actually real, or is it just the government is manipulating the data to make it seem like that there's this economic boom?
The growth is real, but it's not a boom.
Right.
So the real growth is about 2.5%. It's not amazing, but for the U.S., for an economy that everyone already has a car, already has a house, already has a cell phone, already has the refrigerator, everything. The U.S. is a well-developed economy. You can't create growth like super growth for that kind of economy. What are you going to sell to people? What are they going to consume next? Right? It's not China where they have nothing as a group, and they really can't create growth. The U.S. is growing slowly. It's a slow growing country right now. The real growth is about 2.5%, but the stock market is growing at 20%.
Right.
So that is fake. Mm-hmm. Right? The stock market growth, or the growth in equities, is fake relative to the real economy, which is growing, but not at the same rate as it's being projected in equities prices or in real estate prices, etc. Right? But the important thing to understand is that demographically, the U.S. has relied on baby boomers since World War II. So at the end of World War II, the U.S. has not been hit, right? Its economy was facilitating all the industry for the rest of the world, which was in bad shape. And so you saw the baby boom coming, right? So in the 50s, what's the best performing company in the U.S.? It's Gerber. They produce the baby food, right? And then the 60s, they're teenagers. So McDonald's, Playboy comes in, all the teenage stuff. Then the 70s, they go to college, right? They go to universities. In Europe, people had to go to universities in theaters, in theater halls. There were not enough classrooms to facilitate all the demand. And then in the 80s, they're about 30, 35. What are you going to do? You're going to buy your first home. So you saw a real estate boom in the U.S., right? But when it peaked, you saw a real estate crash in the late 80s. Then they go into, speculative, because they got a lot of money. They got spending money. So they go into the tech boom, right? So the baby boomers fuels the economy in the U.S., and that's what Warren Buffett saw in the 50s. That's why he invested in all these companies. And so in the 2000s, they're liquidating. What do you need? You got everything, right? The baby boomers are at the end of their cycle, right? So wellness is important to them, or healthcare. That's why you see healthcare. And then comes the next generation, which is smaller. But now comes a new generation, the millennials, and they're even bigger in demographics than the baby boomers. And they're starting to hit peak earning years. And so they're going to start spending. And so yes, there is growth in the U.S. economy. There is debt and all kinds of problems that are systemic problems, which will be a problem one day, right? This could go on, this level of debt. The U.S. can sustain these levels of debt because they issue the debt and the citizens hold the debt. So it's a fake sort of debt system, which is sustainable so long as nobody mismanages it badly. And so, the millennials, they don't have houses. They don't have cars. This is the new growth for the U.S. economy. This has nothing to do with Trump. He didn't, make all these babies, right? He didn't. It's not like Trump, or you always ascribe it to this leader. This is economics 101. And so they're going to create this surge, and the U.S. economy will go into a recession in about 1 or 2 years. That's fine. But the decade of 2020 to 2030 will see growth in the United States, because these people, the millennials, they need a lot of things. And so it's going to be very interesting to see how this all comes in with debt, right? With political disparity between the poor and the rich. The U.S. right now, if you take the one out of the 1,000, who's the richest in a 1,000 people group, he's richer than the other 900 out of the 1,000. So there's a huge wealth disparity in the U.S. Something similar to Mexico, right? In terms of the disparity.
Sure.
And this is going to be a problem politically, because the demographics that are going to have a lot of influence on politics are the millennials. So you're going to see a lot of friction between the entitlements promised to the retirees and the need to lower entitlements for the federal government coming out of the young generation. They're going to say, hey, why did you promise them so much? So this is all going on, and this is very interesting. So we're going to cover those topics really thoroughly on Wealth Research Group.
Well, we're out of time for this one-of-a-kind panel. It's just been a great opportunity for us to connect here, half a world away from our usual stomping grounds in the U.S. Glad we could connect up with you here in person for the first time ever. Great to meet you. Thanks for joining us both on Reluctant Preppers.
In Finance and Liberty. Thank you so much, Lior.
Thank you.
Thank you.